Okay, so what kind of situation do we currently have on GBP and CD? Let's make a full breakdown. So starting from the monthly time frame, we have a market that, first of all, created this M formation. Now, after the M formation, what did we say? We said we want to see the market make this move to the upside, and that is exactly what the market is currently doing. Now, at the moment, what is the situation? Now, the M formation has already completed. And after an impulse, okay, if you want to measure the retracement, what are you supposed to be doing? You're supposed to be taking your Fibonacci from the high to the low of the impulse. And by doing this, we consider the market just hit the weekly 0.382, which in this case is also lining up with a very strong historical structure level. In fact, here the market had found very strong resistance. Again, resistance here, again, resistance here, and currently the market is testing this same resistance as we are speaking. Going down on the weekly time frame, what do we have? Now, on the weekly, it is pretty clear that the market is currently a little overextended to the upside, and it has also created this weekly W formation. In fact, we have down, up, down, and then the market exploded to the upside. So we have a weekly W formation retesting that monthly structure that we have just identified. And we would definitely like to see a deceleration and a retracement. Going down on the daily time frame, what do we see? Now, on the daily time frame, it is pretty clear that the market has created an impulse, correction, and the market is continuing higher. So the way in which, from a daily perspective, the structure can change back from a bullish structure, as it is right now, to a bearish structure, is if we will see the market break back below this previous resistance, which seems like it will be broken to the upside today, so turned support. Now, if the market today will break this area to the upside, the market can and should continue to the upside easily because we have bullish structure. However, we're not interested in the move to the upside because it would be too risky to be looking for a continuation to the upside in an overextended market. But the opportunity would be if this comes out to be actually a fake breakout to the upside, meaning if today candles closes above and tomorrow the market breaks back below, at that point, that is where we will have the opportunity. And let me show you where we can be looking for this shorting opportunity. Now, before that, let me give you a quick check at what we have from a GBP and an NZD perspective if we check the COT data. So the commitment of traders, what the biggest banks and institutions are currently doing in the market. Now, from a GBP perspective, we can see that currently net positions increased to minus 14K with 6K longs, 6.6K longs added with the last report and 4K shorts getting close, bringing the longs at 45.9K and shorts at 60K. So overall, GBP is getting bought in the short term, and we can see from an NZD perspective that net positions have decreased from 2K to minus 1.4K with 20K shorts and 18K longs. So NZD getting sold, GBP getting bought is no mistake that the market has been making the move to the upside and is still continuing to the upside. However, this situation might change very soon, but we don't know that. That is why trading is reactive and not predictive. So if the market will continue to the upside, fine, is perfectly fine. We will not be looking for a long at a monthly resistance with an overextended market and a weekly W formation. However, at the same time, we can't be looking for a short because we are above daily structure. So the only opportunity on this pair would be if we see the market break back below this structure. So if this turns out to be a fake breakout and the market will break back below, on the retest of the structure, we have a very good opportunity because instead of the zone, at that point, the monthly, weekly, and daily are all showing the same direction because on the monthly, we have the resistance. On the weekly, we have the W formation. And on the daily, we have the possibility to create this head and shoulders plus this impulse correction and impulse pattern to the downside and see the market go and give us a nice retracement. So after the break, on the retest inside of this area, we will be monitoring price action on the 4-hour time frame with students. Why? Because the monthly, weekly, and daily are the best time frames for the direction of the market combined with the COT data, but the best time frame for entry is the 4 hours. So with students inside of this area, we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And if the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for a move to the downside and for the completion of this impulse, correction, and impulse pattern to the downside. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.